Hi, John. Great to be back on the monthly summary. Thanks for having us on this month. I think you really nailed it with this month's theme of uncharted waters. May was really unusual, and not unusual simply because I decided to grow a beard going into the hottest summer months here in Northern California, but unusual because we're seeing some very mixed messages and seeing some things that don't seem to add up. As an everyday average worker bee, I'm pretty happy. The value of my home is back. My 401k is at all-time highs. It's going to cost me less money to take my family on vacation this summer because gasoline prices are lower than they were last summer. So all in all, I'm pretty happy. But as an investor, as an owner of 401k Masters and Gebhardt Group, I'm a little bit more concerned about what we walk into this summer, especially given what we saw in the month of May. We have Janet Yellen and the Federal Reserve Board committing to increase interest rates this year. What does that mean? Well, that means they're going to make it more expensive to borrow money. In effect, shut the spigot off, at least slowly, this cheap money that we've all had access to. Why would they do that? Well, they would do that because they believe economic growth is back, and they're fearful that inflation will take over, and they want to control that and curb that. Now, I know we've seen great jobs numbers. Nationally, we're back to what would be considered full employment, that 5% unemployment mark. But we're not seeing the kind of wage growth that would normally trigger inflationary pressures to get the Fed thinking about raising interest rates. So I'm confused with the mixed messages of the Fed. You can also look at what's happening on the business front. Earnings this last quarter, and especially the earnings that were announced in late April into May, were mediocre at best. People aren't spending like they once were and like they were expected to once winter subsided. More and more people are building up that emergency fund and saving, which for the everyday average family is a good thing, but for the economic engine, not necessarily. So we're seeing spending slow down, consumer confidence is down, and when we look at corporate inventories, corporations haven't been building their inventories up like they normally do. Instead, they're stockpiling cash and buying their shares back, their stock back. So when we look at these all-time highs that the stock market is flirting with right now, I got to scratch my head a little bit and wonder where the economics are that are supporting this. So again, when we look at 401k Masters and Gebhardt Group, we're very particular about the spots we see as trending opportunities going forward. Now, although our sales are mostly up, taking advantage of the bull market and all these new market highs, we did recently enter a partial protect mode with our Gebhardt Group clients, and we did make the recommendation to 401k Masters members as well, anywhere from 10 to 20% cash positions. Now, when we look at the different indices that are showing us the most positive trends potentially going forward, we're looking at the small caps, the mid caps, and a little bit now into the developed international markets. We've taken some smaller positions in big caps and emerging markets, but again, with interest rates potentially going up and a big slowdown in corporate earnings, we've really lightened up our positions there. Now, when I talk about picking our spots, and we look specifically at sectors that our indicators are telling us have the probability for some decent trends going forward, we're looking at healthcare, technology, consumer cyclicals, and financials as the best place to allocate capital right now if we want to get very specific. The good news is, John, is that regardless of what markets wind up doing this summer going forward, we're ready to react on a dime as we have the tools and technology in place to go to full protect mode if we need to, or continue to be in growth mode if that's what our indicators tell us to do. So in closing here, it's a really interesting time that we're in, and the University of Toronto has an economist by the name of Richard Florida who's talking about this time in history as possibly being something called a Great Reset, where everybody in the United States, from workers to employers to economists, really take a step back and reevaluate expectations of what this economics engine's output should really be going forward. This is something even bond fund manager Bill Gross has been talking about in recent years, something he calls the new normal, where we're just going through this whole big reset of how we value economics and how that translates to stock prices. So it's going to be interesting to see what happens going forward. But again, we're ready for anything the markets are ready to throw at us. We're thrilled to be partners with Brokers Alliance. John, Thanks again for having us on this month. I hope everybody has a wonderful, wonderful summer. We'll see you all next month. Back to you.